In this video, I'm going to give you 5 stocks that could double in 2020. But before I get into those 5 companies, I want you guys to smash that subscribe button and give this video a thumbs up if you enjoyed this content. And please be sure to stick around until I list all 5 stocks. I'm just going to go in order from 1 to 5. So let's just get right into it. So before I mention you guys some of the stocks that I'm going to be talking about, I just want to talk about kind of where we're coming from in 2019. So the S&P 500 was up 29% last year. Very well done. So the broad American stock market was up pretty good. So guys, if you're looking for stocks that will return 100% or more, then you're definitely going to have to be looking into those early growth companies that are making a lot of changes, or disruptors is another term that I like to use, that are kind of changing their marketplace and increasing their market share a ton. So the first stock that I'm getting into, and if you guys have been following my channel, I've been posting some videos on this company. I really like it. Is Roku. So Roku is one of the leaders in the streaming TV market, and the stock was up 218% in 2019. And one of the things I love about Roku is that they're not dependent on any one source. They're an aggregator for content, so they're not really in a war like Netflix and Apple, YouTube, who are all fighting for eyeballs. No matter what you watch, you can watch everything on your Roku. So they're going to benefit from the transition from cable to streaming no matter what. So to give you guys some raw numbers, I took a look at their latest Q3 2019 report. Roku streaming hours were up 68% year over year, and active accounts were up 38%. So actually the most important metric you guys want to focus on is streaming hours, because we want to know how people are spending their time. So it's not really active accounts, it's streaming hours. So as long as streaming hours are continuing to go up, that means more and more people are using their platform. More and more people using their platform means more ads shown through the Roku channel, and more commissions earned when people subscribe to other paid apps on the platform. So we just take a quick look at the price chart. The stock is, like I said, it's up quite a bit, over 200% last year, and this is a unique buying opportunity. I think this stock has been absolutely volatile, but every time we've had a little bit of a decrease in price, Roku has been able to kind of come back and fill that gap. So we filled the gap here, we filled that gap here, and I want to show you guys a little bit bigger chart so you can kind of just see it much easier. So if we take a look at the 5-year chart, we see that there's a major long-term trend here. And if we take a look at that 1-year chart, which I was talking about, every time Roku has a kind of dip down, they filled the gap. So they filled that gap there, they filled this gap here, and so this is the next gap that I think will fill. And like I said, I've been reading these quarterly reports, and streaming hours, average revenue per user, all these numbers are up. I want to keep this video fairly short, so guys, because I have a lot of stocks to cover in this video. So guys, just make sure you check out my website so you can get links to all those quarterly reports, or you can find them yourself by going to Google. But basically what I want to mention is that once we fill this next gap here, which I expect passing about $170, I think Roku can go to $200 and beyond. So we're looking at a price target of at least around $260 to fully double, and I think that this stock can definitely do it. The volume on Roku has been phenomenal, the product is phenomenal, and this is still the early staging of streaming. As we see connections get faster, I think 5G connection moving kind of across the board will be phenomenal for streaming, because one of the biggest complaints is people say their internet connection isn't fast enough. So remember guys, as internet connections get faster, more and more people are going to stream. This is kind of the transitional phase where people used to use cable because they just didn't have the fast enough connection. So especially in the international growth in the emerging markets, as internet speeds continue to increase, as well as America too, we should expect these streaming stocks to do very well. Roku, my favorite streaming stock of all, because they're an aggregator, not a direct competitor. So guys, let's get into the next company. So the next company that I want to mention is NIO. So NIO is another one of these disruptor companies. They're based out of China actually, so they're trading as an ADR. But the good thing about NIO is that they're kind of the premium Chinese electric vehicle maker in China. Yes, they do have to compete with Tesla. Tesla just opened a factory there recently, but I like to look at sales numbers. So I'm looking at these electric stocks. I want to see vehicles delivered, because when people buy these vehicles, that is going to provide kind of that brand awareness, as you can see these vehicles moving around in the streets, and that really helps some of the marketing. So their latest January sales update, they delivered around 50% more vehicles in 2019 compared to 2018, plus achieved 5 consecutive months of increased deliveries. So that's what I want to see. I want to see these vehicles on the street. So let's take a look at this chart as well. So NIO is actually a stock that's been hit pretty hard. As you can see here, there was a major run up here around $10 when the company appeared on 60 Minutes. And kind of there was a hype along the company, even though there wasn't the sales to back. So of course that made the stock plummet, and it kind of bottomed out at around October 1st. It bottomed out at around $1.20. So congratulations if you got in there. So right now we're looking at a price of about $3.50. So we would need to hit a price target of at least $7 within the next year, and I think it can easily do that. So we're looking to fill this gap right here at $10, and that's why I'm looking to a lot of these stocks. I want them to fill those gaps. So a lot of them have had quick run-ups due to hype, good marketing, and in NIO's instance it was the 60-minute special. But if this stock can come back and fill that gap, and long-term thinking, I think if you're a long-term holder of NIO stock, you're in a great position, because we all know that electric vehicles are so much better for the environment. It's better for your health. You save a lot of money. Charging is way more efficient than using gasoline. So there's just so many good benefits about it. We know that this is going to be the future electric vehicles. So that it's not if NIO stock does well or Tesla stock, it's just when. So this is another stock that I think is grossly undervalued. It was around over $10, and that was a year ago, and the deliveries have increased 50%. So we're looking at a company that's about 60% cheaper, but deliveries have doubled. Not doubled, they've gone up 50%. So that's one of the reasons why I think that this is another great company that can double this year. So let's move into the third company. Now, Uber is another company that I really am long-term on this stock, and one of the reasons I really like Uber stock. So to me, Uber is one of the biggest, one of the best opportunities, I think, long-term for investors, and another stock that I think can potentially double in 2020. So if we take a look at kind of what's going on here, there's been some negative publicity about Uber kind of pulling out of Colombia, and they're not really pulling out 100%. They're just pulling out the ride segment. They're still delivering food through Uber Eats. So Uber is no longer just a rideshare company. They're very diversified. They're into food. They're into transportation. They're into freight. They're coming up with something called Uber Air, which is kind of like air taxi. So the company is more diversified than just rideshare. So I just wanted to kind of point that out in case some of you guys out there own shares and you were kind of worried about that. But anyway, the stock was at an all-time low of $25, and it's been trending up past 30 lately. And the CEO expects the company to be profitable in 2021. So right now we're at a current price around $34, and the stock needs to reach around $68 to double. And at a $58 billion market cap, I just think it's too small for a company of this scope. So let's just take a look at the chart. So as we can see here, where I'm on Robinhood, I like to use Robinhood charts for a lot of things. I also use TradingView, but for these videos, I'm going to use Robinhood. So the company IPO'd at around, it was around $45. So immediately shares were basically plummeted, and the reason they plummeted was a couple of reasons. Mainly because a lot of the early investors kind of cashed out their shares to take some profits and things like that. And sometimes we expect that it is easy to kind of believe that the stock was quite a bit overvalued when it went IPO, maybe a bit too much hype instead of actual substance. But anyway, so there was a lot of insider buying. If you guys watched the previous video I made, the CEO was buying at around $25, $26 per share. So ever since that insider buying took place in November 15th, we've seen the shares go up. And what I'm looking for again is I'm looking for Uber to fill this gap. And once I think it fills this gap, assuming that more and more people are going to continue using their riding services, their Uber Eats, as long as they continue to have more and more bookings, I think things will do very, very well for Uber. So to me, this is a bottom on the stock. So right now we need to look about $68 per share. So do I think you can hit that in 2020? Absolutely. It's currently at a market cap of around $58 billion. So for it to double, it would have to hit around $116 billion market cap. And for me, Uber is a company on the same scope as Amazon. It's on the same scope as Google. It's on the same scope as Facebook. It's Netflix. It's one of those mainstream brandable, everybody knows company. And even though Uber isn't like in every single rideshare market, a lot of times they own stakes in the big players. So for instance, there's a big player in Southeast Asia, they own a stake in them. There's a big player in the Middle East, they own a stake in them. So they're somehow invested in rideshare all over the globe. And the fact that the Colombian taxi drivers were striking means they know how powerful Uber and ride sharing is, and they're doing everything because they know in the future they're going to lose their jobs. So guys, I really am long term on Uber. I actually like buying call options as well, but I'm just trying to acquire as many shares as possible. For me, this is not a stock I want to miss. For me, in the next 5 years, Uber, assuming it doesn't do any stock splits, this is easily a $200, $300, $400 stock. So for me, I'm buying as many shares as possible. This is another stock that I think can double in 2020. So let's go to number 4. Before I go to stock number 4, if you guys enjoyed this video, just give me a thumbs up right now. And you can also subscribe to my channel as well and turn on the bell notification so you can get a notification when I update and upload more videos. Okay, so moving on. Stock number 4. Okay, so Beyond Meat. So Beyond Meat is another company that I think is poised for immense growth. There's so many health benefits in plant-based meat over animal-based meat. Things like sustainability, it needs less water. It's just so much healthier for the environment. And with the world currently losing so many rainforests and stuff like that due to meat production, you have to clear the trees, clear forests to raise cattle. I think Beyond Meat is another company that is not only good for your portfolio, but it's just good for the environment. So if you guys are socially conscious investors, for instance, you want to invest in, say, healthier products, and you're not into like buying alcohol or cigarette stocks, stuff like that, I think Beyond Meat is a good addition to your portfolio. So since the IPO, the stock's up 282% in 2019. So a lot of the shares are down. There was some dilution going on. They issued some more shares, and some of the insiders sold after that probationary period passed. Usually they require you to wait at least 6 months after an IPO until insiders can sell shares. So shares are down a bit. So let's just take a look at the chart. Okay, so we're taking a look at this chart here. So as we see here, a spectacular run up since the IPO, and then the stock hit almost 200, around $240 was kind of the resistance. And after that, after the dilution, but we're seeing some support here. And one of the reasons why I really wanted to add this video to the list is because I was just sitting here waiting. It's been like almost 3 months since we've seen any movement in the price, and it's kind of sitting right around that long-term support. And recently there's been some bullish activity. So for me, I think if you can get in on Beyond Meat under $100, this is a long-term play, and this is also a stock that can easily double. So even if it doubles, it still isn't going to reach its all-time high. It can just hit about $190, something like that. It doesn't have to even go back to the all-time high to double. And seeing this bullish activity, the recent news with McDonald's and stuff like that, Impossible Foods has pulled out. So it looks like Beyond Meat is going to be one of the main suppliers of plant-based meat to McDonald's. We all know McDonald's is the largest restaurant chain in the world, so that's a great association for Beyond Meat. In fact, that this is just good for the environment. Like I mentioned earlier, if you guys are socially conscious investors, this is good for the environment. So definitely a stock that I think could fill this gap. Not sure if it's going to happen all the way this year, but like I said, we only have to reach about $190 for this stock to double. So that's one of my other favorite plays. Okay guys, so for my 5th and final stock, hope you guys enjoyed this video. Let's get to it. It's SolarEdge. So of course I had to give you guys a solar energy stock. We've been going into all these other companies that are disruptors, and here's another one that is a little bit less known because the company is based out of Israel, but is one of the fastest growing players in the solar industry, and shares are up 197% in 2019. And one of the nice things I like about SolarEdge is this company has been producing revenue and profits very, very consistently. In the last quarterly report, Q3 2019, they've increased their revenue and gross profit for 6 straight quarters. So this company is doing an excellent job. They are basically capitalizing from the switch to solar energy. Solar energy, much cleaner, much cheaper. So one of the short-term, near-term challenges of the company is they're actually their former CEO and founder, Guy Celia, he actually passed away last year. He passed away from cancer. So they do have a new CEO now. His name is Zvi Lando. So that is kind of a bit of an unfortunate incident. So we don't like to see CEOs and especially founders pass away. But you know, we hope that the new CEO kind of puts his heart and soul into this company and kind of grows this company in Mr. Ciella's legacy, because he's doing a lot of nice things. Solar energy is so good for the planet. It's much cleaner. It's much more efficient energy. And this is something that we don't have to start wars over. You know, this is not a political channel whatsoever, but we all know the impact of oil on the planet and how lots of wars have been started over it. So the nice thing about solar energy is that no one has to fight for it. It's basically free from the sun. So I think solar energy is one of the biggest growth industries in this decade. Solar energy, a lot of people have been kind of, you know, resistance to it, but I believe people are going to embrace it. They're going to see when they get those energy bills back, both corporations and residential housing, when they start getting their energy bills back and they start seeing how much cheaper it is, they're going to embrace solar energy. So let's take a look at the stock chart. So I haven't seen too many people mention this company, but the stock is up actually 190% in 2019, and I think this company has so much more growth left. So the market cap is pretty small, only $5 billion there, and this company is doing a lot of good, and they are constantly increasing revenue. What I like to do is, a lot of people, they like to jump over those stocks that are seeing huge revenue gains, but huge revenue gains can also decrease in the short term. But one of the nicer things I like to see is companies like SolarEdge, and one company off the top of my mind, Visa. They increase their revenue and profits slow and steady. So as long as they're increasing their profits slow and steady, we should see that reflected in the stock price. Slower but steady price increases. So shares are currently trading at $104. It just eclipsed the $100 mark. So I think this stock is going to $200 at just a $5 billion market cap. $10 billion market cap for one of a good player in the solar field, where a lot of people have no idea what solar energy is. I think, yes, it can definitely double in 2020. So that's my fifth pick, guys. I want to end this video now because this video has been going on for a bit. Guys, let me know what you think. Do you own any of these stocks? What do you think about some of the stocks I mentioned?